I sincerely believe if you get the right location, the best improvement on a land is a hotel. And the greatness of hotel business has to do with the flexibility of that asset. You can have some retail downstairs. You can have the hotel rooms. You can have hotel suites. You can have small apartments. If you understand that flexibility, you can make a lot of money with hotels.
This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Steven Silverman.
Hello and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Steven Silverman. Steven, what is the story as we head into fall? Finally, we're starting to get, it's not just blistering temperatures. Normally,
well, you know, the interesting thing is we had a hurricane and the temperature changed overnight. We went straight into fall, really.
And we started in May with me feeling like someone had a blowtorch on my head. With how just record temperatures, very uncomfortable. And then all of a sudden, boom, that's it, it's gone.
Yeah. Today I'm cold.
Today you're cold. It's 87 degrees and Steven's shivering. He's got a jacket.
That's Florida, you get used to it. But along with all that, like we're in an unprecedented time. Like feels like we're sitting on the edge of a precipice, and not really a precipice, but there's just so much uncertainty. Interest rates are going up. There's wars in Europe, and oil prices going up, and I'm seeing that a lot of people are just going to sit on the sidelines a little because, interestingly, I haven't seen real estate prices go down like the stock market went down.
Well, you know what we're going to see, Stephen, on commercial properties and residential properties too. People bought these one-year ARMs, and they're getting 1.9%, 2%. Now they're getting reset at 7, 8, 9%. Their deals don't work anymore. And so you're undeniably going to get people coughing up properties. And so, this is just the nature of the beast. And it's coming.
Well, everything I read about, though, it's like totally different to 2008 when, it was just bad lending habits and people were over-leveraged. And everybody seems to think that the banks and the asset holders are in a much stronger position now.
Yeah, there wasn't as much debt in the market as there was through the previous downturn. And what we're seeing, though, is starting to see some slowing in some sectors. Certainly in single family, we're definitely seeing it. And that's going to flow through. It's going to flow through into, if folks aren't buying new homes, they're not hiring handyman, they're not doing, repairs. They're not building new homes, and so that's going to flow through in the construction industry, and we're going to see a little bit of a slowdown. This is the tool that the Fed has. It's a sledgehammer. It's not a screwdriver. It's not a widget. It's a freaking sledgehammer, and the intent is to drive down wages. And of course, we have these other geopolitical issues that are going on right now with Russia. Immediately after this situation with Russia and Ukraine starts to settle down, there's going to be China and Taiwan. So there's a lot of things that are out there right now that give people a moment for pause, and I think we're going to see a slowdown. Of course, you've got the Fed that's working in one direction, and then our legislative branch and executive branch is operating in completely separate directions.
Plus, OPEC is in a different direction, just raising oil prices.
Yeah, you have the legislative executive branches. They're doing this infrastructure bill. I'm not saying we shouldn't have done it, but it's basically inflationary, isn't it? I don't even remember what they call it. It's like the anti-inflation bill or whatever they called it. If you go back and you look at it, the very core of it is inflationary. And so the Fed is there trying to knock down inflation, and the legislative and executive branches are working against the efforts of the Fed. So I don't know. I mean, with Florida, up until 2008, I've never been wrong that Florida just doesn't have this. It doesn't. These downturns don't have the same effect in Florida as they do in other places.
Well, the reason is Florida is unusual because people keep moving here, and that covers a lot of sins.
Yeah, covers a lot. Rising tides lifts all boats, and that's certainly the case in Florida. 2008 was the exception. 2008 was a situation where it definitely caught me off guard because I was a little cocky. I won't be caught like that ever again. But who knows with this time? I mean, this time's always the worst ever. I mean, obviously there's some geopolitical things that are going on right now that maybe we haven't seen before. But from an economic standpoint, I still have a lot of confidence in our area, Stephen.
Yeah, I mean, there's still, in real estate, there's still more demand than there is supply. And it's because of the people coming down. Florida's in a fortunate position now.
We're not going to see prices get reset overnight. And my feeling is we're going to experience some hardship, but it's not going to be debilitating. And that we're going to start to see maybe some of this logjam with asset prices and whatnot start to break a little bit here. But don't expect it to happen tomorrow or next month. It usually is a period that we talk about the 5 stages of grief, right? Denial, anger. Finally, you arrive at acceptance. And that takes a while for people to work through that. Now, we tend to be, in Florida, we enter into these periods last, and we usually exit first. Usually the way it is.
It's like accounting, first in, first out.
Yeah, we're last in.
No, last in,
first out. We're LIFO.
Yeah.
We're last in, first out. That's typically the way it works in Florida. I will still be a buyer when I see good deals. If it makes sense to me from a cash flow standpoint, I'll still be a buyer. I'm still going to be out there in the market. I know it's going to be a little bit tougher on the lending side. Trying to acquire equity and debt is going to be a little bit more challenging, but I will be more cautious. But I'm not going to just sit on my hands either, Stephen. I don't know how you feel.
Yeah, listen, it depends on the opportunity that arises. There's always opportunities when times change. So anyway, that being said, we have an interesting guest today who's going to talk to us about investment opportunities in an area we don't really spend too much attention on in our podcast.
Hotels.
Yeah.
But before we roll into it, I was going to read a review, and I realized we haven't had a review here recently.
So, guys, we do need reviews because the first things that when we're talking to guests and they really want to interview us is like, what do people say about your show? And they go online and look, and it helps us get good guests. So please leave a review. It doesn't matter where, but they cumulatively help a lot.
And we read the reviews. And we like to call out our listeners and appreciate the time that they take to write those reviews. Even the reviews that give Stephen a 1. I'm totally fine with reading those.
Yeah, Eric loves those, yeah.
But seriously, guys, if you've not already, please go to the Apple iTunes store or to go to our Facebook page or whatever and just leave a review. And that definitely helps us when we're doing program because it is a challenge that a lot of time invested in trying to get the type of guests that we feel will bring value to you and your investing careers. Stephen, anything else before we roll into our guest?
I'm ready to roll. Today we have with us Cherif Medawar. Cherif is an investor, a real estate fund manager, and an educator. Cherif is bi-coastal. He started a fund in 2009 and is focused on luxury homes in the San Francisco Bay Area with over $100 million in assets under management. He is also the largest owner of commercial historic properties in San Juan, Puerto Rico, since 2004, and he is active with his office in Florida. Cherif has authored some best-selling commercial real estate investment books and continues to share his methods and programs through his education company. He has produced over 2,000 video trainings and success stories. Cherif, welcome to the Invest Florida show.
Thank you. Thank you for having me.
Hey, Cherif, really appreciate you investing time with us today. You have a really diverse background. Why don't you start by just telling us how you got in the real estate business and then the real estate investing business?
Well, actually, my goal was to be a hotel general manager, and I was working at the Century Plaza Hotel when I was in my early 20s. Century Plaza is a famous hotel in Los Angeles next to Beverly Hills in Century City, and it caters to famous movie stars. Actually, Ronald Reagan used to stay there. It's called the Western White House. So I was working hard as a management trainee, working my way up and putting really 12, 14 hours a day. And a billionaire in the name of Edmond Bessari noticed me. And he said, listen, why don't you come and work for me? I've never seen somebody so enthusiastic working so many hours. I got properties around the world, and I'd like somebody like you to handle my business. I was excited and scared at the same time because I didn't know anything about real estate. But I remember he held my shoulder, was standing in the lobby, and he said, Cherif, just say yes. You're at the right place at the right time. So I said yes, and I started working for him. I worked for him for 8 years, and I was exposed to how to put big transactions together, mostly commercial real estate in the United States, in New York, in Los Angeles, and in Europe. We did in France. I speak French as well, so we did in France. It was just an amazing experience, and he loved hotels, and that was my background. That's what I studied. So that's how I really got to immerse myself in the world of creative financing and real estate and hotels.
That's quite a lucky break. I mean, that's and it's so wonderful that you took advantage of it.
Yes.
You know, everybody's got stories of things they could have done.
Yes, I did it. I went for it, and I said, well, what do they have to lose?
Well, you got to take a few risks, and then stuff happens. So would you say that were these like large hotel properties that you were investing in, or what types of when you were working with the billionaire? What types of properties did he have?
Like, I give you an example of a deal we did. So one day I get a call from him, and he says, I need you to go to Martinique, which is a French Caribbean island.
This sounds like a very difficult job.
No, well, there may have been luck in getting the job with him, but there was no luck in making things happen. I had to learn quickly. I was lost with the nomenclatures, just the word definition that come around the real estate business was just overwhelming. But thank God I had some great accountants, and I could call in Chicago, and I would ask him, okay, we want to put this and we want to do that, and what does he mean by this and that? So his call was, hey, listen, I need you to go to Martinique. There is a land right in front of the water, in front of the beach, and the seller wants to sell it for $1 million. This is a long time ago in the 80s. This would be like maybe 10, 15, maybe $20 million land right now. And he said, listen, so go ahead and offer him an option to purchase, and you can give him some money. We just need 6 months. So I remember flying there. I asked the seller, you want $1 million? I'm willing to give you $100,000 right now for an option to buy it within 6 months. And I remember the seller said, why do I have to wait 6 months? I need to sell right now. It's $1 million. You either have it or you don't. I said, look, I'll give you the $100,000, and we just need to do a couple things. Once we get all the approvals, we will go ahead and exercise the option to buy it at $1 million, and you keep the $100,000. So you'd get $100,000. If we don't buy it within the 6 months, you keep the $100,000. Would you like to make $100,000 for 6 months waiting? And he said, this is great. Let me verify with your bank. They called Chase Manhattan in New York, and Chase Manhattan said, yeah, we know Edmond Bessari. Cherif Medawar is his right-hand man, and this is approved. The cashier check, you can take it. So we got the property under contract. I went to the government based on his instructions, and I asked for a special tax credit. If we build a hotel, would you give us 40% tax credit? Meaning, really, if the hotel gets built out for $10 million, which by the time you're done, it will be worth like $20 million, the government would give you on that $10 million plus the $1 million cost of the land, 40% tax credit, meaning they give you literally a check for $4,400,000 that you can sell to a local bank there, or you can just cash out. So your net cost becomes less than $6 million. And it's amazing because now you're building at 10, it's worth 20 when you finish, but you get this tax credit. So it was an amazing deal. And I remember putting the deal under contract, and then I called them. I said, I talked to the government people. They will issue the tax credits because they love the idea of having a hotel built and local people getting employed, having the room tax and all this to help the island grow. And next thing he said, well, I need you to go talk to Holiday Inn, Marriott, and this, and see if you can just sell the land during the option period. If not, we're going to go ahead and develop it. And I went and I talked to the people from Holiday Inn and I talked to the people from Marriott. I was in Utah. We had a meeting and they said, we want the land. And they actually paid for the land $10 million because of the tax credit. And they built an unbelievable hotel there. So just doing that assignment of deal and putting the pieces together, I realized with $100,000, we literally made $9.9 million in profit. And the whole thing took less than 60 days. And that's when I realized, wait a minute, I can do that stuff on my own. I can just go get some credit cards and do cash advances and just go the big time. And that's one of many transactions we've done. He had a resort in Wisconsin called Olympia Resort and Spa. We bought it from Princess Hotels. He just was an amazing man. Harvard Business School called him the man with two brains. That's how intelligent he was. And it was a great mentorship, if you will. And the rest is history. I just left him and 8 years later and went on my own and would touch base with him periodically. It's just an amazing experience.
So we haven't done a whole lot about hotels on our podcast show, so it's great to talk to you about that. And can you, and since you've specialized to some extent on hotels, can you tell us what's great about hotels? Just educate us on how investors can make and how they make money on hotels.
And before you answer that, I know experienced investors who will do multifamily, they'll do industrial, they'll do apartments. Will say to me, we ask about hotels, and they'll say, "Oh no, that's way too complicated. You have to have this operator, and then there's like this sharing arrangement, and so there's seems to be a lot of complexities in hotels, and maybe you can help to clear that up." So Stephen's asking, what about making money in hotels, and then maybe you can address the complexity issue as well.
Okay, great. Well, I sincerely believe if you get the right location, the best improvement on a land is a hotel. And the greatness of hotel business has to do with the flexibility of that asset. You can have some retail downstairs. You can have the hotel rooms. You can have hotel suites. You can have small apartments. You can have nightly stay. You can have weekly stays. You can have extended stays. Based on what the market is demanding, you can adjust the hotel marketing strategies. You can have different ways to adjust the hotel rates. You can have a low rate in the beginning, and then as soon as you fill up just enough, let's say 40% of the hotel, where you now paid all your costs for staff, operations, etc. Now the additional stuff is pure flow through to the bottom line. And it's like, it's amazing because it's flexible. If one night you want to raise the rates and see what happens, the next night you want to drop the rates, if you understand that flexibility, you can make a lot of money with hotels. Moreover, you can actually, unlike apartment buildings, you can go to big hotel management companies like Hilton that have many divisions like DoubleTree, Embassy Suites Hotels, Hampton Inns, etc. Or you can go to Marriott that have Marriott Suites and so many sub-brands that they have, and then have this professional management company that will come in and manage your hotel. You can even go to small companies that specialize in managing hotels under different brands. So you get the advantage of the big brand marketing of Marriott or Hilton. When somebody want to go to a market, they pick up the phone, call Hilton and say, do you have an Embassy Suites hotel in close to the Los Angeles airport? And they may say, oh, we're sold out there, but we have this other one, the Hampton Inn. And you own the Hampton Inn. Maybe you're no expert in hotel business, but you got the management company that is doing the reservations, doing the marketing, doing the operations. Yes, it does cost you some money, but it can bring you so much more to the bottom line.
So how do those deals typically work, Cherif? You know, they take a cut of what's brought in, or there's a flat fee, or how does that normally work?
So the big branded companies, what they do is they charge for the reservation system, they charge for the flag, which is the brand, and they charge also from the bottom line as well. So you're going to pay some from the gross, some for the brand name, and from the flow through the bottom line, you pay percentage as well. So they become like partners, but it adds so much value to the business and the income of the the property, and they report to you as the owner periodically. They give you the budget in the beginning of before the year starts, and there is reserves. They keep a certain reserve amount that can actually be spent on capital expenditures. Let's say you want to change the pool, you want to improve the furniture, you want to remodel some rooms, etc. And they handle the entire thing. And it will be great for somebody just starting to maybe start with a budget hotel like a Hampton Inn or a Residence Inn by Marriott or a Hampton Inn, which is a division of Hilton, and have Hilton hotels or Marriott hotels run it so they can immerse themselves in how it is run, how it works, and they get to see the numbers because every activity in the hotel is transformed into a number. And the multiplier is huge. And they get their job is to increase their revenue, the gross income as much as possible, so you get the highest net operating income, because the happier you're going to be with them, the more you're going to want to grow with them. And then they're going to tell you, there is this opportunity here, we want to grow there, etc. And they have a development department that you can grow with.
You know, it's so interesting because the way you're explaining it is like the great thing about it is you don't have a lease, so you have that all flexibility. But we've seen times and frankly, like living in Florida, when things go wrong or we have bad weather, when not having a lease works to your disadvantage too.
Yes, but if you have the right insurance, I mean, getting into real estate involves many things. Like even buying a property, it involves a lot of due diligence. So the way I look at it is there are 5 steps. For any commercial property, you can follow the same formula. If there is one thing I learned from the billionaire I worked for is to follow formulas. So you don't have to think anew every time you're going to go into a new endeavor or new acquisition. And the formula I have is called the FACTS system, FACTS, F-A-C-T-S. And these acronyms work for F is to find the right property in the right location first. And then after that, I have to concern myself with finding the right guests. If it's another commercial building, it will be finding the right tenants or the right renters if it's an apartment building. So the 2 things I want to find is finding the right property in the right location, right? And finding the guests. Who are going to be my main guests? Is it a corporate hotel? Is it a destination hotel? Or is it going to be entertainment and leisure hotel? Is it something next in Silicon Valley where I need to cater to big corporations? Is it going to be extended stay? So first, it's finding the property, finding the guest. Number 2, for the A, is analyzing the numbers of the property. How much is it bringing top revenue? What's the average daily rate? What's the occupancy percentage? And you derive from that what's called the RevPAR, revenue per available room. And that's part of the analysis, is the intrinsic value. This is what the property brings. Then there is the extrinsic value, which is how is it doing in this market? Believe it or not, if you're buying a hotel, you can buy a report from a company called the STR report, STR report. You can even Google it and see. They will sell you a report for that particular market. Let's say you want to buy a property downtown Phoenix. You can go to the STAR report, purchase for the downtown Phoenix, and they will tell you, your hotel, this hotel you're trying to buy, this, let's say, Renaissance Inn hotel, this hotel is performing 80% occupancy, average daily rate 148. But then you can see in a pie how the other hotels are performing. Maybe you think, 80%, 148 is a great occupancy percentage and great average daily rate. But when you see in that market, you find out everybody else is running at $200 ADR at 90% occupancy. Now you get to see that extrinsic value that, hey, in that market, there is so much more potential to increase the average rate, increase occupancy, etc. And you can do that analysis, which is important. So not only the revenue that the property makes and the flow through it has, but how it's doing in that market. That's for the A part. So I covered the F and the A. The C is how to control the property. You got to control the negotiation. You got to make the offer, be able to meet with the right people, have the right broker representing you, etc., to work the steps, and then control the entire process through a good contract that gives you enough time for the inspections and the proper due diligence. So find the property, analyze the numbers, control it. Then the next step is the T for timing the process of the due diligence. You need to actually get the right companies to do the due diligence for you. There are big companies that do it for hotels. Nevertheless, you can get inspectors to check the mechanicals, the foundation, the roofs, the drainage, the exterior walls, and they create the proper reports for you so you can understand and plan for what you're going to do with the property, including signage, exterior paint, amenities, whatever renovations you need to do. So that due diligence is done with the proper, having the right company or companies to help you. And then timing the financing. Are you raising capital to close the deal? Have you already raised capital? Do you have a bank lined up? How much down payment? Are you doing it all cash? So you got to time that process to be able to close. And then now that you found the property, analyze the numbers, control the process, time the entire due diligence and closing is the S for the FACT system. And the S is to strategize with the right management company, whether you're going to manage it, you're going to get an outside company to manage it, or you're going to get the big brand company to manage it for you. And the next thing, other than managing it, is how to take it to its highest and best use. What do I need to do to add value here? Can I put antennas on the roof and add income? Can I put vending machines on the floors? Can I put another gift shop? Can I add retail space? Can I lease the food and beverage to a company that will give me steady income with a percentage of increased income from their sales? Or do I want to run the F&B? Can I actually charge for the parking or leave it free? And highest and best use is amazing in hotels. I mean, I remember I bought a small hotel and all I did was just opened the reservation channels, just the distribution channels. I just opened it. I realized the previous owners were mom and pop operators. It was a small hotel and they were barely making any money because the lady was in charge of the hotel. The gentleman had like the gift shop. He had his silver shop there. I got the hotel and we started changing things. We remodeled. We got better mattresses. All of a sudden the reviews started going up and I opened the channels. I put a website. I put it on hotels.com and on Priceline, everywhere. And next thing you know, the hotel just way higher occupancy, way higher ADR, value triple on the property. And we're able to refinance, cash out all the money we put and continue running it.
So what's considered to be a good return on a hotel? Because it's not measured in cap rates like on a multifamily, right?
Okay, so this is a good question because right now you can literally go on websites and look for, I want hotels at 10% plus cap rate, and you will find them. Why? Because the owners are usually they're the operators. It's a small hotel, maybe 80 rooms, 100 rooms, and they're exasperated because there is Airbnb competition. They don't know what they're doing exactly. We just came out of COVID. There is the economy changing. They can't even refinance, interest rate moving up. So they say, okay, I'm going to sell it at 10, 12% cap. So the idea is to verify to make sure it is performing at 12% cap or 10% cap and that you have an upside increase. So you're asking me what would be good? I wouldn't buy a hotel right now at less than 10% cap unless it's a turnkey hotel already running in very good condition with a Hilton or a Marriott brand or a Hyatt, and I can just step back and get my 6%, 6.5%, 7% maximum cap rate, which is capitalization rate, the net that you will get. If you spend $10 million and get 10%, you're going to get $1 million a year. Well, I like the cash flow, but I also want to see an upside. So no less than 10%, and you take it from there.
So you're looking for someone that maybe is not operating to maximum efficiencies. Do you understand how to tweak the system? And you're going in and trying to find increased operating efficiencies or room rate efficiencies, and basically trying to ratchet up that to net operating income.
Exactly. And you have three areas really you can improve. And you have the marketing. You can improve the marketing. How do you go to other distribution channels? How do you manage the inventory of the hotel rooms? Do you open 40 rooms at this price and then automatically the system will default to a higher price and then higher price so you get your maximum rates? The other one is operations. Are we having the right people in the right places? Do they have the right tools so they can actually have the computer system they need to be able to see, are you creating the right incentives in the operations to be able to make it happen? Is the maintenance team, they know what they're doing to run the hotel efficiently? Do you have low flush toilets? Do you have good machinery, etc.? And number three is in the financial areas. You know, can we refinance the hotel? Can we dispute the tax, the property taxes? Can we actually get the numbers to perform better with good marketing, good operations, make it flow through a better number. It's capital intensive, but it's extremely rewarding because the multiplier is there. And in some markets, I mean, you need hotels. And I give an example in Puerto Rico, for instance, as an island. This is a U.S. territory. It's part of the United States. I'm not talking Costa Rica. I'm talking Puerto Rico. It's U.S. territory for the past 100 years. I mean, they have shortage of hotel supplies. So what the government did is they created the tourism tax incentive. So, for example, I have 2 buildings that I bought in Old San Juan, which is the oldest historic zone under U.S. flag. This is the capital of the island of Old San Juan. That's where the cruise ships arrive, etc. So I bought a couple dilapidated buildings that are in great location. Downstairs is retail, and the retail rents for like $20,000 a month. This is top location because of traffic is unbelievable, a lot of tourism, etc. And upstairs, we got an approval to put in each building 30 rooms. Those are going to be 30 luxury rooms. There is shortage of hotel supply. So the government has created a tax incentive of 40%. Now, just listen to this. Upstairs alone can sell for $4 million. You will need about $6 million to make it a beautiful, beautiful 30-room hotel upstairs. This is each hotel. That's $10 million invested. But the government gives you back 40% tax credit. So they'll give you literally a check, a certificate of tax credit for 40%. You'll have $4 million on the $10 million you spent purchase and rehab. You show them receipts. There's an audit process. It's not something to be done like amateur, like you do it professionally, you get the right CPAs, etc. You present that, you can sell it to the banks like First Bank or Banco Popular or any of these banks. These banks operate in Miami, New York, Los Angeles. You sell it, you get $4 million. So your net cost is $6 million, and the hotel is worth maybe 15 to 20. This is like my mentor used to do some 40 years ago, and it's offered right here in a U.S. territory. So and you don't have to put even the $6 million cash. You can get a loan from the bank. Like I bought the properties. I have loans on each property, and I'm going to get a partner, and we're going to create like a syndication of some sort because he has a lot of contacts, and they literally will invest minimum $100,000, and they're going to get that benefit, and they're going to have tax incentive, and the whole area is an opportunity zone. It's just unbelievable when you understand how to put the pieces together, and we don't even have to run the hotel when we're done. We can get a management company, and we can even make it a timeshare, which now each room you can sell it 50 times. It's just crazy.
So when you say opportunity zones, are those the same opportunity zones that we have in the States where you're not going to pay?
Puerto Rico is in the States, brother.
Exactly.
Puerto Rico's not a foreign country. It's
I just didn't even think of opportunity zones being over there.
Yeah, that's true. A lot of people didn't know that opportunity zones are here. So it's just mind-boggling that each property could make $10 million in profit on $2-3 million invested. And then you have 2 of these. I mean, I can compare apartment buildings all day long. I think there's a lot of work. And there is one thing about hotels that I like is when I buy a hotel, like there was this small hotel, like 80 rooms, and they had 16 staff members. And I went to look at the place. It was in Orlando, Florida. And the team, it's turnkey. I'll buy the hotel with the team, and it was no big brand. It was Red Roof Inn. But I got outbid by another company. Actually, I wasn't even outbid. It was the same price. I said $8 million. They said $8 million would close sooner. Okay, so they didn't come back to me. They just closed with the other company. But it was literally turnkey. The property was in good condition, performing next to a hospital, got good occupancy, and has still an upside potential. And everything was looking good. And it still looks great because of the hospital next door. And so really, it's just putting the pieces together, understanding the asset potential and the cash flow and how great it could be.
So talk to us a little about syndication. How are you structuring these deals? I mean, obviously, most people that are listening to this show, maybe not obviously, but so you know, most people listening to the show are single-family home investors. They might own 1, they might own 10, but they're thinking about making that next step into multifamily, and that next step might be a 10 or a 20 unit apartment complex. Now, listen, we have folks that are do $100 million developments that listen to the show as well. I'm just talking about from a pure numbers standpoint, and from a pure numbers standpoint of the listeners, they're going to be intimidated by the size of a hotel. So talk to them about how you use other people's money to do these deals through syndication.
Okay, so there are two types of syndication. Or just a side note here, I have an education company, so I help people set up their own syndications or real estate funds. So let me just kind of give you an overview of this. Basically, there are two types of syndications. There is what's called an equity fund, where you actually get somebody and they are going to benefit from the upside. And there is a debt fund, where somebody's going to go in as an investor and say, I'm just going to give you X, and I want, let's say, 8% flat. I want 6% or 8%, or I'm going to give you more money, I'm going to get 10%. So you kind of you can create either or you can create a hybrid. So when it's a hotel deal or an apartment building, usually the investors want an equity fund. So they're going to put so much money. You're going to go with your own net worth and good experience, and some of your money, you're going to put it with them. And you're going to go get a loan. And in today's market, you probably have to give a personal guarantee. And you're going to get the loan. And you're going to describe clearly in a private placement memorandum, here is what we're going to do. We're going to take your money. We're going to have this team of people involved. And we're going to be in this particular location, and this is the building we're going to buy, and this is what we're going to do with the money for this building, and this is what we expect in terms of performance, and this is how we're going to pay you. We're going to pay you so much in cash flow, and we're going to give you so much on the upside. Upside is going to be maybe in 5 years we're going to sell it, and in 5 years we're going to give you, let's say, 65% of the upside increase in value, and we, the syndicators, the operators, are going to keep, let's say, 35%. So that's an equity fund. The debt fund is going to be, hey, you give me, let's say, $25,000 to $250,000, I'll give you 6%. You give me over $250,000 to millions of dollars, I'll give you 8%. Your money is going to be in this fund, and this is a debt fund, and you're going to get paid every, let's say, 6 months. So if I pay you 8%, you're going to get 4 and 4. You don't care if I start operating right away, if I'm developing from the ground up. You don't care if I'm improving, changing brands. That's all my problem. And the fun part is going to be you can attract a lot of people that don't want the hassle. They don't want to take the risk of an equity, because if they lose money, they will, if the project loses an equity fund, they lose money. In a debt fund, they get a promissory note. They get steady income. They don't have to make any decisions. And the difference between a syndication, which is one deal in that structure, and a fund I can put 3-4 hotels. Like I have a fund. I set up funds. I've been in the fund business. I've been teaching this since 2007, when people couldn't even understand what the word syndication means. And now I've been in the business. My first fund was in 2009, and we've been still running with it over 12 years, successfully paying on time. And it's a debt. The reason I like debt funds is I charge no management fee, no acquisition fee, no disposition fee. I pay 6, 8, or 10%. I pay the people religiously every 6 months, February 28th, August 31st. And if anybody want to cash out, they send me an email, and they can cash out within a 12 months notice. They don't have to wait 5 years when we liquidate, etc. And the fund itself has some hotels, the luxury homes in San Francisco, some properties in Puerto Rico, some retail buildings. And we do all this so their money is, if you will, secured against all these assets, not just one asset. So we can reduce the risk, manage the risk a lot better, which is the name of the game.
And is it a blind fund that you do, or is it always property specific?
So if it's a syndication, it has to be property specific. But a real estate fund, it's literally a blind fund, if you will, but by telling them, this is what we're going to be acquiring. Residential and commercial. Residential, like I explained my fund, for example. I say we're going to acquire high-end luxury properties in San Francisco. We buy them between $3 to $5 million a property. We add value, we add square footage for 3 to 4 million, and we sell them at 12 to 15 million. And we've been doing this since the 90s, and we do it very well, and we've been very successful at it. Also in the real estate fund, we're going to buy commercial mixed-use properties where we have maybe retail downstairs and apartments upstairs. We turn some of the apartments into Airbnb, or we're going to buy some hotels that have downstairs retail, or we're going to buy some retail and upstairs office, etc. And we are diversified by location, San Francisco, California, and Old San Juan, Puerto Rico. We're diversified by type of asset, luxury, residential, and commercial mixed use. We're also diversified by type and style of investing. We buy, fix, and sell them within 18 months to 2 years. And the commercial, we buy them, reposition them, and hold them. So we have cash flow and we have big cash outs. So anybody wanting to cash in, they come into the fund, we pay them the 6 or 8 or 10 if they put millions of dollars, we pay the 10%. Anytime you want to cash out, it's better than any CD. You send me a notice, we cash you out. So that fund, for instance, has grown tremendously through the years, and the business model is amazing. And I've helped many people set up their own funds, literally duplicating exactly how I've done it. I have even attorneys that work. I have in-house attorneys. I have enough size in terms of what I do between Puerto Rico and San Francisco and other parts like in Florida, that I have my in-house team, CPAs, accountants, etc. And I also have the education company, which is a great way to actually teach people, hey, you can do what I do. I'll help you set it up, or you can invest with me. So in a certain way, I give back. And if people want to invest with me, I make it easy for them.
So, it's very interesting the way that whole hospitality world has changed. And you mentioned Airbnb, and that you also get involved with it sometime. And how does that, tell us a little bit about that, how that's impacting the hotel world, and if it's still a profitable type of investment.
Okay, so when Airbnb started, a lot of people said, oh my gosh, it's going to be the death of hotels. Well, it didn't. It actually added so much to the occupancy and hotel rates. I mean, you can look historically how hotels have done. They've done very well. Yes, they took a dive during COVID because nobody wanted to go anywhere, but then they immediately recovered as soon as things started opening up. As a matter of fact, you take a place like Puerto Rico, for instance, 2021, you can Google this, was the highest level of tourism than the island had ever seen in its history. The hotels were packed. And I do have a lot of Airbnb because I own the largest inventory of historic properties in Old San Juan, Puerto Rico here. So what I did is I took the residential, I realized there is need for Airbnb, converted, furnished all the residential apartments. I took an apartment building, 12 units, that's luxury, put it all Airbnb, and we ran 90-some% occupancy. And it added to the hotel benefit because people want to go to a hotel, it's sold out, they go to the Airbnb. They want to go to Airbnb, it's too expensive or sold out, then they go to a hotel. And even Marriott and Hilton got into the Airbnb concept, and they buy these luxury homes and they put them in their inventory. If you go to Marriott.com and Hilton.com, you will see that they have this entire new business model to compete, and they're able to, people call them and they say, okay, so you have a large family coming, all the suites are taken in Hawaii for this, but we do have a couple residential properties, a little bit more expensive, but they have this and that, let me show you. And they upsell, and it works great. It adds value.
So talk to us a little bit about changing subjects on you, Florida. You actually do some residential developments in Northport, do you not?
Yes. For years, I shied away from developing from the ground up, but Florida is an exception because there is so much demand and people moving into the area that even right now, you could see they're saying 4,000 people a day are moving to Florida, especially South Florida, especially west. Now, sadly, Southwest area got hit very hard with the hurricane, and was devastated. I am focusing on, just a little bit east of that, closer to Saratoga, like Northport and this area. And it's really amazing because there are so many people coming. I can build, it's kind of a cookie cutter, these homes that just sell at around $500,000. And with the hurricane hitting now this area, there will be, and there is already more demand. We can see immediately a spike in certain prices for the lands and all this. And we're still okay with it because we know we're going to buy, we're going to build, and we're going to make it happen. There will be people coming to buy a turnkey 3-bedroom, 2-bathroom finished product. And that's just amazing. Florida is an amazing state. It's very pro-business. And if you know what you're doing, you can make a lot of money there.
So hotels also in Florida or just the residential properties?
So the interesting part about hotels is, for hotels in Florida, what I would do is I would look, let's take Orlando because I'm familiar with it. I would look for hotels that are in fairly good shape. And maybe they're going to lose the franchise name. They're going to lose the brand. Let's say it's a Quality Inn and it's no longer such good quality. So the owner wants to sell it. I would go in and see the potential increase in occupancy and average daily rate. I would figure out how much I'd have to spend and whether I want to put a brand or run it as a private hotel and what the return would be. I'd make a good deal coming in. And the interesting part, you can do a lease with an option to buy. You can do a seller carryback, or you can do financing, or you can do a syndication. There are many ways to slice and dice the deal. The key thing is, how can I get it to its highest and best use? And I'll do all this through the 5 steps that I talk about: finding the property, analyzing the numbers, controlling the deal, timing the due diligence, and being creative on the financing. Then I'll strategize to manage it the best way possible and take it to its highest and best use. And once the Russian war stops and well, hopefully it will stop soon. I don't know. This is a crazy thing going on. And hopefully inflation subsides and everything starts pulling back, and maybe before the end of 2023, I can then refinance and get a good interest rate or cash out the seller who carried financing. But you'll be amazed how many sellers want out. They get older, they get tired, and they want out, and you can work that creative deal with them. And if you have a good broker who's familiar with that and can negotiate well, it will be a win-win for all.
What size of deal makes sense in order to be profitable? I mean, look, some of these hotels are really small and they seem really labor intensive. I would think you have to get something that's at least big enough so that you can have enough revenue coming in.
Yes. I like 75 rooms and more. Although I got to tell you, I give you an example. I bought a property that was 14 rooms. It was actually 10 rooms and 4 small apartments. And I bought it for $1.8 million. And we just changed the marketing, improved the beds, turned it around, put a retail shop in the front. And the hotel is just, right now we're under contract at $4,250,000 to sell it. And the whole thing took less than 24 months. Literally before COVID, after COVID. And you can make a lot of money with small hotels. And it's run by literally 2 housekeepers, 3 people at the front desk, and 1 person managing the rates. And we put it as a hotel under the hotels.com and all this. And we also put it Airbnb for the apartments. So you open as many distribution channels, and you could see the multipliers. The opportunities are amazing. And if you want to go bigger, you go bigger.
Who's handling the operations of a hotel that size? Are you managing those?
Yeah, I have a young lady, and she actually got trained. She was a front desk clerk, and I saw her potential. She knew how to do the bookings. She knew the software, the system. And when the manager was getting married, so we promoted this one in-house, and she said, we need to do this, we need to change that. And we went to the hotel and said, okay, let's make these changes. So she literally runs it by managing the revenue and doing the schedules and managing the staff. And the staff, 3 people at the front desk, a couple of housekeepers every day, and the hotel is 14 units. And it's a money machine. The vending makes money. The retail in the front makes $4,000 a month. The hotel is a cash cow. And you know what? If the market turns, let's just take the worst case scenario. I can take the hotel rooms and rent them $1,000 a month because it's already all included. They don't have to pay utilities and whatever. And it will attract a lot of corporate travelers. And the apartments will rent for a lot of money as Airbnb. So the downside is taken care of. It will be fine. The upside was huge. I could see the potential. The day I walked in, I said, my gosh, they're not running it right.
Yes, so I guess that's a scary part for people walking in, not knowing the business. Like you can walk in and recognize something, but for the layman, it takes some market knowledge or industry knowledge, and that's why it seems like apartments are an easier way to go because It's just more intuitive.
Yes, and I have done consulting for many people that want to buy hotels and they don't know how to do the due diligence. And it's really based on comparable. Let's say I'm going to rent an apartment. I'm going to look at comparable rents. So same for a hotel room. I'm going to rent a hotel room, and actually it's even easier because you can go to hotels.com and look at the area and find out how come this hotel is renting so low. I mean, if you drop me right now in, let's say, Key West, Florida, and say, Cherif, can you find a hotel in Key West? A good opportunity there. I'm just going to go look at the hotels online that are in Key West. I'm going to maybe find a 30-room hotel to dabble with. I'm going to find the opportunity where they're selling very inexpensively. I'm going to start looking at what's around it. I'm going to find out, wow, they have a little view. Let me see if I can build a second floor on top. Let me see if I can change the hotel rooms in a certain way to open the marketing a little bit better, maybe improve the operations, this and that. And you know what? I can maybe get $20 more per night, per room. Next thing you know, the hotel is flowing an extra maybe $10,000 a month, and the hotel is worth maybe $1 million, $2 million more per year after a year in operation. So it's not that difficult. And as a matter of fact, when you buy a hotel or a motel, you already got the team. Sometimes just walking around as I do the due diligence and I say, can I talk to the staff? They say, okay. And I talk to the staff, I talk to the maintenance person, I talk to this, and you find out amazing things. They tell you, you know what, I wish they do this and we can rent this room, but they're using it as storage, and then we need to change the boiler room because there is this, and we're doing the laundry outside because they don't want to buy new machines. I'm like, wow, it's just amazing. Amazing.
Yeah, it's interesting what you learn, management by walking around.
Yeah.
So, Cherif, this has been so fascinating, and there's so much to cover. We probably need 5 podcasts to do it. But if people want to contact you or either about a deal or about investing, what's the best way for them to reach you?
I think easiest way is info@CM, like Cherif Medawar mining, REI.com, which is like Charlie, M, my last name Medawar, R like Robert, E like Edward, I like international.com. Is my company, it's my education company, and it will go to probably Ashley Jones, my VP, and we'll be able to set a time or a call or whatever if people are interested in that. I'm always happy to talk. I mean, hotel is one of 12 different assets we do. We love retail as well, etc. And I know you're in retail and your company does very well with that. But the easiest way to reach me, info@cmrei.com.
Cherif, this has been very informative. Really appreciate the time that you invested with us today.
Thank you very much.
Steven, anything else before we let Cherif go?
No, thank you, Cherif. You've given us a lot to think about.
Thank you so much. All the best to both of you. Take care.
And that was Cherif Medawar. Steven, talking hotels. You know, we haven't had anybody talking hotels. It was really good to be able to listen to someone talk about that asset class that was super knowledgeable and passionate.
Yeah, I thought it was fascinating because, you know, we talk to investors all day long and, you know, typically it's multifamily, it's retail, it's office. And because the thought of a hotel is daunting, and it was so interesting to see all the opportunities that are out there, but you have to know what you're doing. You can't go in there. You have to have market knowledge.
Yeah, and I mean, if I would even think about doing something like this, I would talk to someone like Cherif that would be able to walk me through and hold my hand, because there are a lot of moving pieces. It's not like buying a self-storage unit or buying an apartment complex. There's a lot more moving components to it that I just don't understand. But I mean, he was very clear about the basics, and he certainly offers training and consultation. And I'd probably go through someone like Cherif, to help me with this type of investment. And it sounds like there's certainly the returns there that are worth considering.
Absolutely.
Cherif is a great guest, Stephen. Other great guests, how can we find them?
So the place to go to listen to all our great guests is www.investfloridashow.com. Also download the app so you can listen while you're mobile or in the gym.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Steven Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.